What has been my strategy when I've been investing over the years? This is a question I get asked a lot by a lot of people, and I thought, you know what, let's just make a video about it. So let's get into it. So this is a tricky one because it involves me using my brain and going back and looking at specifics. So that's going to be tricky for me to do. So what I'm going to do is I'm going to kind of loosely base it around what I've done in the past in terms of projects wise. Some of it's going to be wrong, I know, but the values that I'm going to place and the trades and the numbers, it's just going to be nice, pretty round numbers, and they're not going to be indicative of how much I actually did invest and stuff like that. I don't think it's a secret. You know, many people know that I invested the start of this journey with £500. That's what I started with, and when I really started getting going, I'd first doubled it to £1,000. This was in 2018, and I invested it into Quant. So we're going to take a little look at Quant to begin with. So we'll talk a little bit about how this all plays out. So my first project that I really got involved with, the first project that I really started to change my strategy was Quant. And I had around $1,000 to invest in Quant at the time. This is going to be a messy setup stream. There's not going to be a lot of structure to it. And if you can hear rain in the background, we've had like the hottest summer ever in the UK. And it's been absolutely scorching. And the day that I decide to record this is the day that the heavens open and the rain starts pouring. And look, you can see it. This is what it's like in the UK today. So if you can hear that rain, I apologize. So I invested in Quant around $1,000. I had $1,000 to invest with. Sorry, Quant has not reached $1,000 yet. So I invested $1,000, and I invested. It was under $1 that I got my first Quants, my Quants. But for the sake of this we'll say $1. So around $1,000 invested at $1 would get you any prizes for getting this right, guys? 1,000 Quant. So that is essentially what I started with. I had $1,000 and I got in under $1, but it was very close to $1. Let's just call it that for example's sakes. And I had around 1,000 Quant. Now a lot of you will be saying that's a lot of Quant, and it is. But back in the day, it didn't feel like a lot because I knew people. Thunder. Oh no, the heavens are actually opening. So back in the day, I had around 1,000 Quant. It didn't feel like a lot. I knew people had 30,000 Quant, 20,000 Quant, and all of these huge numbers. So to me, 1,000 Quant actually didn't feel like a lot at the time, and I felt a little bit, I guess, insecure about it, about the fact that like I was obviously talking about Quant a lot, and everyone thought I was this huge Quant whale. When in fact I wasn't. I didn't actually have a lot of Quant to begin with, and I knew that my account size was small. I had $1,000, and to me that was the most money I'd ever had to play around with in my life, and I'd worked very hard to get to that point. And I know there's a lot of people out there who are in similar positions. They don't have, you know, an abundance of money to chuck into the markets, and they have to be shrewd and strategic. And hopefully this video helps, because this is a roundabout way of what I did and how I managed to grow it in a sensible way, I guess. So I had around 1,000 Quant. So essentially what I did is I went all in early, because I think if you have a little amounts of money in terms of $1,000 and you're diversifying that too much, or you say I'm going to have like 5 projects, I'm going to put $200 into each of them, it's going to be very hard for that money to grow as quickly. So what I did was I went to one project and I went hard in terms of research. So I researched my ass off to understand these projects. And sorry, I burped there. To understand these projects And I really researched it. I really put my work in. And I was very confident in what I was holding with Quant. I was very confident. And it gave me the conviction I needed to put the money in to Quant and to feel safe and feel comfortable about that. It wasn't just, I'm going to chuck it into this shitcoin and hopefully it works. To me, it was, I have a lot of conviction because of the research that I've done in this project. So I went all in with that $1,000. And I think if you're a newer account, I'm not going to say you should go all in, and this isn't financial advice. Of course, we have to put the disclaimer out there, but um, having conviction in a play and putting a large percent of your portfolio in it rather than diversifying it at a smaller amount worked for me. It worked for me. So $1,000. So what happened was I started to have I started to try and understand, well, where can this go price wise? And that's where the research came in, and that's where you start looking at its TAM, the total addressable market, and that's where you start looking at all the verticals it can touch. What does the technology do, and who's its competitions, etc., etc. And I had a lot of conviction in the fact that this can grow a lot and this can go to a higher amount. So I was willing to hold. Quant went up to, let's go have a look. Quant went up to $15 at one point, which was a lot. So this is, I don't know if this is the start of the chart. It is. Okay, so I got in around this here. So this was me around these prices. It was late. It was September. So it was around this area here. And Quant, at some point, we had these big peaks, these big troughs, peak, trough. And this drawdown here, we went up to $5. And we had a big drawdown. This was a big prolonged drawdown, but pretty much half of 2019. And then we had this huge move to $15. Now, this was a big move. This was a very big move. And to go from around, let's call it 75 cents to $1, let's just go with 83 cents, whatever. That was a big move. That was 1,750% move. Okay. So I remember selling a little portion of it around $10 because in my head it was $10, $50, $100. So in my head I needed to take some off the table because I needed to, I needed to feel good about myself and where I was, and I need to reward myself for picking off a good trade. So $1,000 times, and we're going to go with $10, is £10,000. Okay, so let's write that on the whiteboard. So 1,000 Quant sorry that this is going to take a bit of moving about. At $10 equals, again, for the mathematicians out there, this is very simple, but we're just putting it up there for example's sake. So all of a sudden, 1,000 Quant became 10,000. 1,000 Quant became worth $10,000, which at the time I was like, holy fuck, I got $10,000. Like, I've never had that much money in my life. It was insane money. But what I started to think was, well, what happens if I can replicate that process? Okay, if I can find another project that I believe in and have high conviction in, and I can replicate it, so I can find it at a cheaper market cap and grow it the same way that Quant did. Because if I had that conviction in Quant, there must be other projects out there, and I wasn't really looking at the time, but I started to look around, and I'm not going to say it was perfect. I think I got very somewhat lucky on Quant. I did the research. But then when I started looking around, I started thinking I really knew my shit. and I didn't. So what I did was I started looking around. And what I landed on was a project called Vector Space. Okay? Now, Vector Space was a project that I started to get interested in. It was along the similar lines of Quant in the hold on, let me take a drink. In the sense that it was working with institutions. So they were working with institutions and had decent tokenomics, and it was the total addressable market, the TAM, was huge. It had a huge TAM. It was all machine learning and AI, and these institutions were going to be using their technology to get an edge on the markets and predictive machine learning algorithms, but with data sets. So up front, I lost faith in the project for one reason or another. I'm not going to go into it here, but for the longest time, I had a high conviction in the project, and I was doing something similar to what I was doing with Quant, and I decided to invest in it. Now, what I could have done was I could have taken this $10,000 and then put that into Vector Space. And then, you know, if I'd had a similar move, then all of a sudden I would have had 100 grand. Okay. But that wasn't a sensible thing to do because this was a complete risk. Investing in Vector Space was a risk. I took the risk on Quant, it paid off. Now, if I'd put all of that money that I had into Vector Space, maybe it wouldn't have paid off. Maybe I would have gone back down to $1,000. Now, I couldn't afford to lose that money. I couldn't. So I decided to take a portion of this and decided to just do the same thing again. So I took around $1,000 and I decided to put it into Vector Space. Again, these numbers are not entirely correct. I'm doing it for an example's sake, but it's kind of loosely based on reality. So then I went for $1,000. Now I remember on Vector Space, there was the reason why I went in on Vector Space was because there was a bigger investor at the time. I remember this was all in the telegrams, and it was around about here. I remember it was all on this under $10, under 10 cents, and I really loaded up, and I remember there was someone selling. I think there was like a bigger investor, and they were just liquidating their entire position. And I remember the story was something like they had to because their firm was going bankrupt or something like that. Anyway, there was some real big sell pressure on the markets, and I remember scooping a lot of it up around under 5 cents, which was all in this bit here. So let's just say 5 cents for example. But I remember getting a very good price on Vector Space at the time because I was watching the markets and I was just watching it crash. So $1,000 divided by 5 cents equals 20,000 VXV, which was the ticker at the time, or it still is. So all of a sudden I had now $9,000 in Quant. So this is what the portfolio looked like, I guess. Let's go 9,000 Quant. Again, this is very dumbed down, but I'm trying to do it so it makes sense, you know, so there's no one asking questions. And now I had 20,000 VXV. That's wrong. This should be 900. Okay. And this was worth $9,000. And this was worth $1,000. Let's put a little equal sign in there just for kicks. So that was what the portfolio looked like from here. So then I started thinking, well, I want to try and do the same thing. I'm hoping that this can have the same sort of run and effect that Quant had. And lucky enough, I was right. So I remember this pump here. I watched this for a long time, and I held it for a long time. And in this time, Quant was going up, and Vector Space was going up. And I remember getting close to around. I remember it was $2. I was started having some. No, it wasn't $2. Sorry, it was around $1.50. I started selling. I remember it was around $1.50. I remember I wasn't as jazzed up about the project anymore. I'd started seeing some flags that I wasn't comfortable with. Again, I'm not shitting on the project. I'm just being realistic. So I remember it was around $1 to $1.50 that I started to get a little bit itchy bum, itchy bum time. So let's just, for example's sake, we'll go with $1. Okay, just for example's sake. So that $1,000 invested in Vector Space, which was 20,000 VXV. Now at $1 was worth $20,000. So from that $1,000 that I invested, now we're going to ignore the fact that Quant also went up in price. But that $1,000 that I invested in Quant, taking the $1,000 that I had made from the profit of Quant and diversified it into another project, I'd made from the 20,000 VXV that I made, for once it hit $1, was $20,000 in VXV. So that $1,000 got turned into $30,000. Now this was over the course of a couple of years. Wasn't outlandish. And there was some other things going on at the time. I remember I diversified some stuff into other things, but I'm just trying to give you an idea. Because the moral really is that for me, it was never about just chucking that into Vector Space. For me, it was about keeping the money that you'd made safe. It wasn't about making the money. It was about keeping the money and taking risks that were sensible risks. Now, if this had gone to shit, if this had not happened, if Vector Space had just never ever got off the ground, turned out to be a scam, whatever it was, and this money had just disappeared, gone to zero, I would have still had $9,000, and I could have lived with that. But if I'd put all 10,000 in, and then Vector Space had gone to zero, I wouldn't have recovered. I would never be where I am today, and I would have been broken. I probably just would. Crypto is just the worst, whatever. So it was all about taking a gamble, but an educated gamble in a project that I'd done a lot of research in, and taking an amount and putting it into it that was a sensible risk. Because it's all just calculated risks that we're taking, but it's all about risk management. So that was essentially what happened, and that is essentially my process. So when the next project comes along, now I can't remember what the next project was, to be honest with you. I'm trying to remember. No. Was it Luna? I can't remember what it was. It might have been Luna, because I remember I got into Luna around $2. It sounds right. Obviously, we don't talk about Luna, and they cut the price off before we went to Shitsville. I think it was Luna, but there was some other ones. There was like Unizen in there, Alliance Block. There was a bunch of projects. It was like Hafa. Let's just use Luna as the example, because I know I invested in Luna. Okay. I know I invested in Luna around $2.50. So let's just go with that. We'll go with $2.50 on Luna, because I know it wasn't at $2 exact. So I know we shouldn't talk about Terra anymore because it went to shit, but we didn't know that at the time. And again, it looked like it had strong fundamentals and everything like that, all of that jazz. So I remember investing in Luna. Now we have, at this point, the portfolio is, let's update the portfolio. So Quant around that time, I know I didn't sell any Quant, so let's go with Quant. The start of 2021, what are we looking at here? Start of 2021, around $40. That sounds about right. Sounds about right. So this, let's get a little arrow. Boop. So that turned into 900 quant, let's say at $40. So we'll go, I'm just aware now that you can't see my calculator. So 900 at $40, $36,000. Okay. So we've got $36,000 there on quant, and we've got $20,000 on vector space. Okay. So now the portfolio all of a sudden has gone from $1,000 to $56,000. Okay. So now it was all about, well, what's the next project? Now we're going to just use this as an example for others to go with. We're not actually going to be talking about me specifically again. So $2.50, we're going to go with Luna. And, oh, shit, sorry about that. $2.50 on Luna, and I can't remember how much we put in, but I remember that thinking I think it was around $5,000. That's what I is sticking out in my memory. I can't remember the exact amounts. My brain is terrible. I can't even remember what I had for dinner last night. So, what did I have for dinner last night? Holy fuck. What the fuck did I have for dinner last night? That's just completely thrown me off. Holy fuck. Shit. That is how bad my brain is right now. I didn't have fish. I know I didn't have fish. Hot dogs. I had hot dogs. That was it. Jesus Christ. I thought I was having a stroke. Right. So... right. So $5,000 invested into Luna at $2.50 is 2,000 Luna. Okay. So again, the portfolio is worth, so let's just say we're going to take it from this. We sold it from thingy. We sold, okay, how much would that be worth at the time? We're going to go $5,000. So $5,000 worth at $1. So we had 15,000 VXV left. It's now worth $15,000. And then we've put that 5,000 into Luna, which is 2,000 Luna. Oh my God, that went wrong. We don't need this one. Right, which is worth $5,000. So you can see how the portfolio starts to build. You can see how over time the portfolio is getting bigger and bigger. It started off with just one project, then it becomes two, and then the profits made from this one makes this investment viable. Then the profits made from this one makes the investment in here viable as well. And then over time, you get a portfolio that starts to build. Now, this is obviously slow. This is a slow way of doing it. This is not the, chuck the money into shit coins and, make 100x in a week. It's not that sort of thing. For me, it is very much just slowly build it over time. And if you're sensible, then it will pay off. And I truly believe that. And luckily, it has. But that is what I would give if there was advice to give to others. It would be, don't chase the shit coins, because as much as you can make a stupid amount of money on those shit coins, and you can, there's a lot of people playing with the Doge chain stuff at the moment, you can make a ton of money on that, and good, all power to you. But you can also lose everything, and I've seen people lose everything, And even on, it doesn't just have to be shitcoins. For this example here, projects that were highly, highly regarded. Now you can say, oh my God, what an idiot, they invested in Terra. A lot of people invested in Terra. A lot of smart motherfuckers invested in that project. And they all got wrecked and they were all wrong. So it's like every investment is a risk. Shitcoins are the creme de la creme of risk. So that's why I don't really touch them. I don't go near them. It's ironic that I'm talking about I don't touch them and go near them when I'm talking about this fucking stupid ass project right here in Terra. But for a long time, everyone had no concerns and very little concerns and didn't think that the way it played out was going to play out. Let's just put it that way. So I was lucky enough to get out from Terra Luna around $50. Now it wasn't on the way. I'll show you where it was. It was on the way up. I know that. So I remember I got in, it was around $2, $2.50, whatever it was. And I remember selling, it was around here. I thought we'd topped. I thought we'd had this little break up here. I thought we was breaking down. And I thought, I'm going to, on this candle here, sell. And it was around $50. Now, clearly, it went up to $100 odd. I felt like an idiot. I felt like stupid. I felt like I'd just made the worst decision ever because it doubled again. Obviously, I was very, very lucky in that regard. So I sold there, still talked about the project because I still thought it was a good project at the time. Obviously, I was dead fucking wrong. So I remember selling them around $50. So let's go, for example's sake, again, we're doing this for example's sake. I have to keep stressing that because these figures aren't exact. It wasn't whatever that number is. 2,000 Luna at $50 is worth $100,000. So you can see by having the conviction in something, and I have to stress, this strategy only works if you're early. It only works if you're early. And being early is only doable by putting in the work and putting in the research. You have to put in the work. You have to do the research. You have to spend a stupid amount of time at your computer, on your phone, having headaches and migraines, to understand if this is a project that is going to ultimately succeed or is going to, is undervalued. It's going to be worth more in the future. Because they're two different things. Quant, I believe, is going to be one of the biggest projects in the entire space. And then there are other projects that you look at it more like a trade. So you have to understand, is this going to be worth more in the future, or is this going to succeed ultimately? Sometimes you're wrong. Sometimes you're wrong. But that is essentially my investment strategy. That is how I grew my account. So let's just say this down. Let's do this again, and let's turn in to the newer amounts. Again, this is not going to be completely correct because I sold VXV and Quant. So actually, let's not even do that bit. So that's essentially it. That is essentially how I grew my account. It was I went big on a project early on because I didn't have a lot of money and I didn't want to diversify it because I didn't think that was a good way to grow it. I felt like that would have been extremely slow. And even though this was slow, it was still quicker. So that $1,000 went into Quant at $1, for example's sake. And then when it hit $10, it was worth $10,000. I took 1,000 of that, put it into Vector Space at 5 cents. Again, had to be extremely early, did the research, understood what was happening on the charts, why price was going down. 20,000 VXV all of a sudden. Your portfolio now looks like this. 9,000 in Quant, 1,000 in Vector Space. When Vector Space hits $1, it went up to 20. I will say, Vector Space, okay, I fucked up on Vector Space. And even though I lost faith in the project, and that works both ways, okay, because Vector Space went up to $20. So I sold around $1 to $1.50, which was around here. And look at where it went. It pumped an extra 1,200%. So I missed out on that. I missed out on it. And that's where like your conviction, if you start losing faith in a project or you're not gelling too much with it, then yeah, you can lose out, I guess. I clearly can be wrong as well. But back to this, so we got $20,000 all of a sudden. So by this point, which was like early 2021, let's just say now your portfolio looks like this. So you take the 5,000. This was $20,000. You take the 5,000. You've sold 5,000 VXB, and you put that into Terra. You've now put $5,000 at $2.50 into Luna, and then all of a sudden, once it hits $50, it grows. This strategy only works. It's not a strategy. This is just something that I've done. So this only works if one, you're early. Two, to be early, you have to do the research. The research breeds conviction. You have to understand what you're holding, where it's at in its cycle, and you need to understand its industry, its verticals it can touch, its TAM, all of that stuff. And you have to also understand when to get out, have predetermined prices when to get out, and understand and continuously assess whether that project is still worthy of your investment. You know, because I love quant, but if all of a sudden shit started happening to quant that I wasn't comfortable with, then I would have to start questioning whether I want to be in that project still. And that's what I've done over time. You know, vector space, Unizen, stuff like that. So that's just a little insight into what I did. I'm not saying this is what you should do. I'm not saying this is the best strategy ever. People ask me what I did. That was what I did. It allowed me to skim bits off investments to put it into the other one to try and replicate what I did the first time, with smaller amounts. Not in the terms of going all in on a project, but similar amounts. They're not crazy amounts. Now, obviously, this takes time. It takes a lot of time, and you have to be willing to accept that. You're not going to get rich overnight. Very few people did, unless you put $1,000 into Shiba coin and it went up to become the greatest fucking animal meme coin. Then you'll get lucky, but not many people do. So I believed it was better to go slowly and to do it over time, and luckily it worked out for me. And the bigger the account gets, you know, once you start having, you start with $1,000 like I did. Once you start getting to the $100,000, then all of a sudden you can take a bit more risks with projects. And I took a bit more risks, and it allowed me to put $5,000 into a project this time, $10,000 into something this time. You know, maybe $10,000 into a sale, maybe $5,000 into a project I really like. But it allowed me to be a bit more loose with my investments. So, and it's good knowledge that, you know, it's well documented that the first 100,000 is the hardest. To be honest, for me, the first $10,000 was the hardest. To go from $1,000 to get to $10,000 was extremely hard, because of the waiting and the time it took. But yeah, once you, the more money you have, money makes money, and it's a slow road to get to that point. But once you get there, things do become easier, and you know, you can use that money to add a bit of security to your life and stuff like that. So it's not an easy process unless you get extremely lucky in something. It's not an easy process, but that's just kind of how I did it. I'm not saying it's the right way to go. That's just how I did it. And I wanted to share that with you guys because I get asked this question a lot. And that's what this channel's for, so I can kind of, you know, express a little bit more. The heavens are starting to open outside. You can probably hear it. But yeah, we're going to end it there. I hope everyone has got something out of this. You know, it's not about, you know, compounding the entire amounts to something else. Now, I know one person who has done that to an unbelievable degree, and that's Donny Big Bags. He was someone who was in quant early, and he was he made good money off Quant, and then he took that money and put it into Ocean. I remember putting it into Ocean, and Ocean then went crazy. He made a lot of money, and he's been like the king of taking like the entire investments or large portions of his investment and compounding it into the next investment. And if you can do that right, that is like, holy fuck, you're going to make a stupid amount of money. I don't think I'm smart enough to do that. Some people are. But the way that I did it, I wanted to replicate what I did the first time and just keep replicating. And I've been lucky to replicate that a bunch of times. And it's just through, you know, knowing what you're doing, knowing what you're investing in. Now, of course, you can get it wrong. And I've got it wrong. Plenty of times I've got it wrong, where I put it into projects thinking I can do the same thing, you know, and I've been wrong. Demetra, I've been clearly wrong on Demetra. Listen campaign, I put a good amount of money into that. That is practically worthless. They fucked it up at launch, completely dead. Demetra would take a miracle at this point to get anything out of that project, even though I love the idea of the project. But the tokenomics have just destroyed it. And you know, once you're able to put money loosely into other projects, you start losing the standards, and you start getting a bit more, you know, risky investments. Just doesn't really matter as much. So I've really paid the price on that, and I've lost some good money on those sorts of projects. So not to say I'm anywhere near perfect. I haven't been. I've lost good amounts of money on a lot of projects. But I've had more winners than I've had losers. And that's through this, not taking the entire amounts and putting it into something else. It's by taking a very small fraction of your overall portfolio, putting it into the next thing. And you can afford to lose a couple of times. You can afford to lose. So anyway, I'm going to cut it short there because I know we've been going for half an hour. I wanted to keep this short. And I feel my house is going to just get struck by lightning in a minute anyway. So I should probably go hide under a desk or get in a bath or something. Hope everyone has got something out of this. We'll do more videos. Let me know what you want. If you got any questions, let me know in the Bongamentals Discord, on my Twitter, on my YouTube in the comments. All the links are just below me here. So hope everyone has a good day, and I'll speak to you in the next one. Bye.